Credit cards can either make you richer or quietly destroy your finances, and the difference comes down to understanding how they actually work. Learn that, and you'll use them the way the wealthy do, as a tool, not a trap. Most people are never taught how credit cards really function. They just swipe, hope, and end up paying for it. Today we fix that, step by step, so you can enjoy the perch while paying the banks absolutely nothing in interest. First, what is a credit card really? It is not your money, it is a short-term loan from a bank. Every time you swipe, the bank pays the store and you promise to pay the bank back later. That is the whole deal. This is the key difference from a debit card. A debit card spends money you already have. A credit card spends the bank's money, which you must repay. Used wisely, that borrowed money is free. Used poorly, it becomes very expensive. Now, the trick that lets smart people use cards for free. Every credit card has something called a grace period. It is a window, usually around 3 weeks after your statement, where you can pay your balance with zero interest. If you pay your full statement balance by the due date, every single time, the bank charges you nothing. You borrowed their money for weeks for free. This is the golden rule. Always pay the full balance, never just the minimum. Now, the trap that catches millions. If you do not pay in full, the grace period vanishes and the bank starts charging interest on your balance, often 20% a year or more. This is where the real damage begins. You will hear the term APR, the annual percentage rate. That is the yearly interest rate on your borrowed balance. On a card, it is brutally high compared to almost any other loan. Carrying a balance at that rate is a financial emergency. And it compounds. Interest gets added to your balance, then you pay interest on that interest. A balance you cannot clear snowballs, growing faster than you can pay it down. This is exactly how people get stuck in debt for years. Now the sneakiest trap of all, the minimum payment. Your statement shows a small minimum due, and it feels safe to pay just that. But the minimum is carefully designed to keep you in debt for as long as possible. Pay only the minimum on a large balance, and you could be stuck paying it off for over a decade, handing the bank thousands in interest along the way. The minimum is not a friendly option, it is the bank's profit machine. So if cards are so dangerous, why use them? Because when you pay in full, the benefits are genuinely powerful. The first big one is rewards. Cards pay you cash back or points, often 1 to 5%, on money you would spend anyway. Think about it. Pay your bill in full, and the bank pays you to use their card. You essentially get a discount on your normal spending. The wealthy treat this as free money, while the bank hopes you slip up and pay interest. The second huge benefit is building your credit score. Using a card responsibly and paying on time proves you are reliable, which raises your score. A strong score later unlocks cheaper mortgages, car loans, and approvals worth far more than any rewards. Cards also offer real protection. They provide fraud safeguards, the ability to dispute bad charges, and often purchase or travel protections. If your card number is stolen, it is the bank's money on the line, not the cash in your account. One more piece to understand, your credit limit. That is the maximum the bank will let you borrow. But a quick pro tip, do not get close to it. How much of your limit you use heavily affects your credit score. This is called your utilization. The rule of thumb is to keep your balance well below 30% of your limit, and ideally much lower. High utilization signals risk to lenders and drags your score down even if you pay on time. Now the winning playbook. First, only ever charge what you can already afford to pay in cash. A credit card is not extra money, it is a convenient way to spend the money you already have. Never spend more. Next, pay your statement balance in full, every single month, automatically. Set up autopay so you never miss it. Do this and you capture all the rewards, all the credit building, and all the protection, while paying zero interest forever. And keep your utilization low, and never chase rewards by overspending. The moment you buy things you cannot afford to win a few points, the bank wins. Discipline is what turns the card from a trap into a powerful tool. With the basics down, how do you pick a card? For most beginners, start simple, a no annual fee card with flat cash back, often around 1.5 to 2% on everything, easy, free, and rewarding. Watch out for annual fees. Some premium cards charge a yearly fee in exchange for bigger rewards and travel perks. They can be worth it if you spend enough to earn it back, but as a beginner, a free card is usually the smarter call. You may also hear about balance transfer cards, which offer 0% interest for a limited time to help you pay down existing debt. They can be a useful escape hatch, but only if you have a real plan to clear the balance before the rate jumps back up. Let me save you from the big mistakes. First, paying only the minimum. You now know this is the fast track to years of debt and thousands in interest. Always pay the full statement balance, no exceptions, ever. Second, treating your credit limit as a spending target. Just because the bank lets you borrow $5,000 does not mean you should. Your limit is a ceiling for emergencies and your score, not a goal to spend up to. Third, opening cards for flashy rewards while carrying a balance. If you pay interest, no rewards rate can save you. The math always favors the bank. Master paying in full first, then and only then chase the perks. Let me lock it in. A credit card is a short-term loan from the bank, not your money. Pay your full statement balance within the grace period and you borrow for free. Carry a balance, and brutal compounding interest destroys you. Used right, cards pay you rewards, build your credit score, and protect your purchases. Keep your utilization low, set up auto pay in full, never pay just the minimum, and only spend what you already have. That is the entire game. A credit card is just a tool. In careless hands, it causes years of debt and stress. In your hands, now that you understand it, it becomes a quiet little money machine that pays you to spend money you were spending anyway. If this finally made credit cards make sense, give the video a like, subscribe for more simple money lessons, and share it with someone stuck in credit card debt. What money topic should we break down next? Tell me in the comments.